SoFi has had a wild month. The stock dropped over 20%, bounced right back, and has been quietly climbing again, but there's more going on behind the scenes. Macroeconomic forces are in play. If interest rates get cut soon, and that's looking more likely, SoFi could be in for a big rally. What's the outlook for the rest of 2025? Some analysts say the stock is seriously undervalued. Others are dialing back their expectations. Meanwhile, SoFi keeps growing, quarter after quarter, year after year, and that's finally starting to show in its stock price. We saw strong momentum late in 2024, but now market fears, Trump's tariff talk, and global recession worries are dragging everything down. The big question is, can SoFi still rise above it? Before we go deeper, like this video if you're finding value. It helps the channel a ton. I'm trying to hit 500 likes on this one. If you're new, hit subscribe so you never miss updates like this. SoFi isn't just a loan company. It's a modern financial hub. It offers personal loans, student loans, refinancing, mortgages, investing tools, and more. It's built for early professionals looking to manage all their money in one place. A lot of people still treat SoFi like it's a brand new startup, but it launched way back in 2011, over a decade ago. Yes, it only went public a few years ago, but by then it was already a well-established business. SoFi isn't in its infancy anymore. It's a solid fintech player in one of the fastest-growing industries out there. Fintech is on track to become a $1.5 trillion sector by 2030. Right now, it's just 2% of the global financial market, but it's expected to jump to 7%. Within banking, fintechs could make up nearly 25% of all value in just a few years. 2022 hit the sector hard. Many fintechs lost over half their market value, but that dip looks more like a speed bump than a roadblock. Now let's talk about growth. SoFi is absolutely delivering. Member numbers, up every quarter. Product offerings, growing fast. 31% year over year. The last quarter alone saw over 1 million new product additions. That's as much growth as they saw in all of 2020, but now they're doing it in 3 months. More members mean more chances to cross-sell products. Selling more to existing users costs nothing. Revenue goes up, costs stay low. That's the sweet spot for any business. SoFi is doing this better than ever. Financial services and their tech platform now make up nearly 50% of revenue, up from just 24% back in 2021. That shift shows SoFi is no longer just about lending. It's becoming a full-service financial platform. Revenue and profit are growing steadily. Adjusted net revenue just hit a record high, and for the first time, SoFi is profitable. Here's what management expects in 2025: $3.2 billion in revenue, up to $865 million in adjusted EBITDA, and $305 million in net income. EPS could land between 25 and 27 cents. For Q1, they're guiding $725 to $745 million in revenue, but only 3 cents in EPS. That tells us earnings should ramp up fast in the next few quarters. If they start with 3 cents and finish around 27 cents for the year, that's big acceleration. William Blair's analyst is forecasting 3 cents for the quarter. That sets SoFi up perfectly for a beat-and-raise quarter. Another big boost could come from interest rate cuts. Jerome Powell hasn't committed to more just yet, but pressure is building. Europe has already cut rates 7 times. More are expected. If the Fed follows their lead, fintechs like SoFi could surge. So what's the long-term vision? CEO Anthony Noto wants SoFi to become a top 10 U.S. financial institution. Right now, SoFi is worth around $12 billion. JP Morgan, over $645 billion. That's a massive gap, and a massive growth opportunity. In just 5 years, SoFi's customer base has grown 10 times, now over 10 million users. That drives strong revenue and gives them more chances to upsell products over time. They're finding smart ways to grow without taking on too much risk. SoFi signed a $5 billion deal with Blue Owl Capital. They've added another $3.2 billion in loan platform funding from Fortress and Edge Focus. These deals shift the business toward fee-based revenue, more stable and less capital-intensive. That's great for momentum. 2025 could be a breakout year. Last year, SoFi hit profitability for the first time. Their net margin was 18.7%. For comparison, JP Morgan runs at about 32%. SoFi is clearly on the right track, but there's room for improvement. If a recession hits, SoFi may take a bigger hit than the big banks. But the team has been preparing for that. They're tightening operations and preparing to weather any downturn. So what are analysts saying? Market Beat shows a $12.50 average price target across 16 analysts. The high is $20, the low is $3. Of those 16, 6 say buy, 6 say hold, and 4 say sell. Mixed reviews. But here's what matters. Major institutions are buying. Institutional ownership has nearly doubled since early 2023. Check out Fintel. Big money is loading up, not pulling back. SoFi stock trades at a price-to-sales ratio of just 4.5. That's reasonable for a high-growth fintech. If you believe SoFi will keep growing its user base, boost revenue, and expand profits, then today's prices could look like a steal down the line. SoFi's growth isn't slowing down. Their next quarter might be their best yet. What do you think? Is SoFi still a buy in 2025, even after a 40% drop since January? Let me know your thoughts in the comments. If you enjoyed this breakdown, hit the like button, drop a comment, and subscribe for more deep dives just like this. Thanks for watching, and good luck out there.